Welcome, welcome. How we doing, everybody? Rudy, what's up? How are you? Welcome, everybody. How we doing? How's everybody's day? Oh, nice, Adam. Love to hear that. Love to hear that. There's definitely some things to be hit today. It was a good one. Yeah, earnings days. Yeah, they tend to be really good or really bad for people. That's about how they go. Ricky, how we doing? Oh, well, wow. I have to be honest, I don't have the answer for that. My assumption is going to be yes. But I actually don't know if both of the Googles will pay a dividend. I mean, I would assume so, but again, I actually don't know. That's something that I would have to look into myself. Yeah, Google's been it's been a fun one ever since I mean, God, when you and I were first talking to Ricky and I didn't like it, that's probably a year ago, you know? This was when I really hated Google. I mean, when it was in that 100 range, it just was not moving nice enough. But for Fridays, it was always good. But yeah. Oh damn, we got we got call in the house, dude. He's feeling himself tonight. What's better, Goog or Google? I honestly don't as far as which one's better, I think that's going to be a lot more up to you. The Class A stock gives you more voting rights, but let's be real here, you probably don't hold quite enough shares of Google to really for that to matter, so it's really up to you. Like, and the voting rights are literally like when they have shareholder meetings, they'll put up votes. It'll be things like, they have to, if they want to split, for example, or if they want to offer a dividend, that was likely presented to shareholders first. You're in a 170 for tomorrow on some Google. I mean, at this price, it'll be worth 400 bucks. So, that's just a 174. I mean, it'll be worth slightly more than that, but right around 400 bucks if we open here. Of course, anything can change by open. Yeah, call's scaring me too. Okay, welcome everybody. We're gonna give it a couple more minutes. Thanks for being here. Um, gonna be talking some price targets tonight. Realistic price targets. And what I mean by that is, you don't want to be the person on trade for that sees like one red candle and thinks that we're gonna just absolutely, are we going to low of day because we had one red candle, you always want to have your uh you always want to have your your whole trade plan set up first. And that includes profit targets, you know, because if you don't know your entry, you don't know your stop out, you don't know your target, then you're already setting yourself up for failure. That's one of the main things I work with people in one-on-ones is, you know, figuring out your whole trade before you enter it. You know, when you do that, then you instantly know how much you can lose, you know how much you stand to make, and so you can remove a lot of the emotions from those trades. And if you when you remove those emotions, all of a sudden you'll stop making those bad decisions. You know, being too heavy or stopping out when you shouldn't stop out, you know, just breaking all of your rules. And then on the more fun side, the profit targets. We're going to talk a little bit about how I set profit targets for uh, swings, scalps, and you know, longer day trades, because you should really treat all of them uh a little bit differently. You know, a scalp, you might just be looking for a quick bounce. A day trade, you might want to, you know, have a different contract to let it breathe a little bit. And a swing, you know, you are likely going to have those further out targets, because if you don't, then there's really no point in swinging. You know, you shouldn't be swinging because the trade is red. You should be swinging because the trade is intact. Like, I think if you got a trade and you're down 30-40% on it going into close and you swing it, that's just not good trading, you know? But so tonight we're going to be really looking for setting profit targets for the different types of swings. Let me do one thing real quick. Second. Okay, and with that, we will get to rolling. Thank you so much, everybody, for being here. Dirty River, I appreciate you being here. And like I was just saying, if you weren't here, we're going to be talking price targets tonight, and really, you know, setting your targets to you know, some specific realistic things. And then after we've done that, we're going to talk a little bit about, you know, managing those positions based around those profit targets. You know, for anybody who's traded with me or traded with flips or traded with any of us that scalp, you'll always hear us say trimming. You know, one of the worst things you can do is have a position that goes nice and green, and then you let it go back to red, and you didn't trim any of it off, and then maybe you start doing dumb things like averaging contracts, things like that. Tonight, we are going to try to really help all of you learn how to make, you know, those realistic profit targets. You know, just as an example, you know, if Apple's trading down here at 150, you don't want to be the person on trade floor buying the 165 Apple calls. That's just not realistic. A rule that I like to follow, keep your strikes within your target. And so that goes for scalping, day trading, all of it. But so what I've been doing, you know, as most of you know, most of you come to my classes all the time. What I've been doing for about, you know, 2 months or whatever it was really showing all of the things that I do when I trade. And this is kind of just, you know, wrapping all of those things together, and really, as always, you know, working on trade plans. I think it's one of the most important things that people really lack when they are, you know, trying to trade and trying to make some money trading. Most people go into it without any sort of plan. And so when you don't have a plan, it can really hurt you. So that's why I've tried to show people all of the different things that I do, so that you can formulate your own plans. You can make up your own ideas. You know, as I always tell people, my DMs are always open. Send me any trade ideas you have. But don't just send me a DM and say, you know, what do you think of Google calls? Send me a chart and say, you know, hey, I'm looking at Google calls, and you know, this is why I'm looking at them. And then I can really work with you. And then, you know, a lot of people have been watching my lectures, and then they can say, you know, hey, these are the things you taught me. This is what I'm looking at. How do I trade this trade? And so with that, tonight, we're gonna look at a couple things that I want to trade, but what I've tried to do in my last couple of lectures is really look at things that you all are trading, talk about trades that you are in. That way we can kind of do, the two birds, one stone thing where I can teach you a little bit of something, hopefully, and then we can apply it to your actual trading. And so tonight I have a couple of things that I wanted to talk about. Just some stocks that I was looking at that kind of have some, more potential upside, downside, whatever it may be. And then hopefully this will only take us, the first half of the class or so. And then after that, I want to look at some of your guys' trades, look at some of the things that you guys are looking at. A couple things that we likely won't be touching on tonight are obviously going to, and they're going to be the things everybody wants to talk about: Google and Microsoft. No point in talking about them. We have big data in the morning. Who knows if these numbers that they put up hold? Who knows if they sell off? Who knows if they rip a whole bunch more? There's really no telling what they're going to do. So I know everybody's going to want to be diving into calls or puts or whatever it is that open tomorrow, but we are not likely going to talk about those. And so with that, the first ones that I want to look at, oh wow, you guys are just going hard tonight, huh? The first one that I want to look at is, oh, I gotta, you're hilarious. First one I want to look at, Apple. And so Apple doing horrible, no denying. Obviously, when you look at big picture on Apple, we got two pretty major trends here. It is trading relatively solidly below both of those. So that's what we're working with on Apple. However, I am starting to look at it for something of a bounce trade. We had these previous lows over here that have thus far held on. You don't want to be the person shorting lows. For in my experience and all good traders' experiences, when you chase the shorts, you get blown out. It's happened kind of the last couple of days on SPY even, and it goes the other ways too. When you chase the longs, you can often get blown out. You hear me and Flips and everybody talk about it all the time. Don't buy calls at the top of big green candles. Normally that's going to kill you, so you want to look, you want to buy calls on pullbacks, in uptrends, and you want to buy puts on bounces in downtrends. That's going to be the best thing to do. So on Apple, I'm looking at, big picture. As all of you know, we're just going to kind of go through this how I would do it. As all of you know, I personally always start on the daily. I think it has the most important information of really any chart around for us. It shows us the levels that we really care about. You notice that I will virtually always put my levels on wicks. To me, the wick is more important than where the candle, and this is kind of relative, but the wick to me is the most important part because that is where one side gave up. So we know we had heavy selling, and then somewhere down here we had this 165.60 ish, and we bounced. I mean, we bounced, obviously earnings, blah blah, but we bounced. Same as over here, we hit this 167.50 level. To me, that's super important. We took a big bounce off of it. We bounced $20 off of there. So we want to take note of those levels. If the market didn't want to get past them before, it might not want to get past them again. And we can see they tried for a few days and have now given us a very nice bounce. So to me, for really the first time in months, we're kind of seeing some, and hopefully the data doesn't come out tomorrow and just destroy me on this, but we have kind of seen the first signs of reversal on Apple. We've had these random big days. We had some AI news back here somewhere. Had these random big days, but for the most part, people have been very, very quick to sell Apple. So to me, here's the lows. You don't want to be short down here. This 165 to 167 area, you don't want to be short down here. Next thing that I'm going to take note of is right here. We have our daily 20 SMA. As most of you know, I trade the SMAs pretty heavily. It's currently 169.50-ish, but it's gonna, likely go up a little bit tomorrow. I trade these SMAs pretty heavily. So what I'm going to do is always label something like this. So I can just know if I'm going to glance at the chart, I know that's the daily 20. Next thing that I'm going to take note of is this downtrend that we had going here. It's obviously not this one, and it's obviously not the super major one from up here. However, this downtrend, pretty dang important. Gave us a big rejection, gave us a big failure, and are now attempting to break over it again. So to me, we are kind of starting to have some things in our favor that, are maybe looking like we might get a little bit of a reversal on Apple. Am I saying it's time to run to all-time highs or anything like that? Absolutely not. And so with that, that's where we can start getting into setting some profit targets. So how I'm going to do that, I'm always going to start on the daily, and I'm going to look for major things. Anywhere that we have major highs or lows around us, I'm interested in. To me, this looks pretty major. To me, this one actually looks pretty dang major too, because we had a nice bounce, nice sell-off, nice bounce again, nice sell-off that ultimately broke and gave us a new level. And so what I'm looking at here is the trend break. Looking at the trend break, looking at the SMA break, to me, this offers us a very, very nice entry. Then want to look close. Where have we had issues before? Pretty dang obviously this 178.50. You don't want to be the person buying calls 178.60. You don't want to be the person buying calls up here. That is likely going to be a pretty terrible entry. And so what we want to look for is for me at least, I'm looking for any sort of pullback. We're currently above this SMA. And so to me, this will be our very nice entry for any sort of call bounce. So we have our levels. One of our levels happens to line up with the 50 SMA. So we're going to keep leaving that one there. But then we want to go into shorter time frames because that's what we're going to trade on. So start on the hourly, make sure that we have levels around us that are reasonable targets. That's what I keep talking about here. You don't want to be the person buying Apple calls at 170 saying we're going to 180. You want to actually look at these things and say to yourself, where's a place it might go? Where's a place where I want to trim? How can I manage this trade to, in the end, get the maximum return out of it? And that's really what setting price targets is. Where do you want to be taking contracts off so that you are able to, finance more and more and more of your position? You'll hear it all the time. I do it in my tab. Flips does it all the time. Some of the others in here, I know that for the most part, Zabes and Nando, they like to do the all out sort of thing. Once their profit target is hit, they like to just get out of the trade. For me, I personally like to trim more often than not. And so, yes, you can end up paper handing. Of course, I do it all the time. But as I reach more and more of my profit targets, that is where I exit. So when we're looking at something like this, we now have our levels. We now know roughly where we want our entry to be if we're playing this call bounce. Our call bounce is based on the daily 20. That's where I want to be entering. So the next thing that I have to do is start to look at, where is my stop out going to be? And on a trade like this, for me, I really like that. We have the daily 20. You know, Depending on the trade that you're looking for, this is where we're going to kind of get into a few different ideas, and we're just going to use Apple for all of them just because it's kind of a nice setup right now to try these trades. For me, if I'm looking for a scalp, I'm trying to enter as close to this daily 20 as I can. If we zoom into the 5-minute chart, any sort of pullback, like if this was the middle of the day and we were trading right now, I would be in Apple calls because I'm looking for a test of this daily 20. If I'm scalping, then I'm not looking for huge moves. This, we can still use these as final profit targets if the scalp turns into a day trade. But for me, anytime that I'm scalping, I am always going to, Flips does it all the time. Most of us do it all the time. You want to look left on the chart and you want to use things like recent highs. Like this 178 or 170.84. Really nice target if we're bouncing off this 20 up to, we obviously got those nice pushes off of the earnings after hours, big moves. Most big tech names pushed up at least a little bit on that. And so any dip down to here, I'm buying. Really looking for a scalp to these highs. When I'm scalping, I am taking off most of my position. Well, likely trimming on the way up. We'll have EMAs, VWAPs, SMAs, whatever you trade in between here and there. By my profit target, I'm out of all of my contracts but one. If one wants to run, great. But what I do when I'm scalping is I bump that stop up to just below the profit target and I let it ride. Maybe I get stopped out, maybe I don't get stopped out and I get to bump it up again. But when I'm scalping and you're really scalping, you aren't planning day trades, you aren't planning swings, you're actually scalping. Keep those targets reasonable. On something like Apple, obviously its contracts are pretty cheap. If you're looking for a very quick bounce, you aren't looking for a day trade, you aren't looking for a swing trade, you're going to want to be right at 170 for a contract. Because if we can bounce this 169.60 area over 170 and go in the money, you get what's known as increased gamma exposure. And so because your gamma is high, your delta is increasing fast when you make that transition from out of the money to in the money. So on a scalp, you typically want to be pretty close to the money to take advantage of more dollars on a smaller move. So for a scalp on something like Apple, that's going to be really, really great entry, nice likely bounce point for a quick, whatever it is, 15, 20, 30% trade. However, that's just, our nice tight profit target. If we're looking for more of a day trade, get off the 5-minute chart. You can look at the 15-minute, but even go to the 30-minute chart and trade these types of things because when you're in it for a day trade, I see it all the time, in one-on-ones or even just DMs with people, I even had it today with somebody who was in SPY and he's messaging me, and he's in next week Friday expiration SPY calls. He was messaging me every 5-minute candle. Oh, and we can even just look at SPY just to see what I'm talking about. He's messaging me, every 5-minute candle. Oh, we're going up. Oh, of course, sellers, sellers, sellers. Of course, there's sellers. And then we take a bounce. Oh, I should get out. We're selling every red minute candle or every red 5-minute candle. Oh, this is it. I got to get out. And I'm telling him, nice toasty level. And I'm telling him, trend is up. Stay in the trade. Who cares? This is a day trade. This is a day trade that you have a week and a half of time on. Quit looking at these 5-minute candles. So I finally, after talking to him, get him to exit that. And then he goes to the 15-minute chart. And all of a sudden, you look at this 15-minute chart, and there is no reason to be exiting calls this entire time. And so then when this one finally happens, obviously he'd been following a stop up, he did get stopped out, which is great. You shouldn't have been, if you caught this, good for you, but it was gamble, and he was trying to have a trade. So when you finally zoom out to those bigger time frames, it can help you dramatically on holding trades. So if we come back to Apple, we can use our exact same theory that we're using for the scalp trade. For entry, it's going to be the exact same thing. A touch of this daily 20. However, for our scalp, really if we get a couple 5-minute candle closes under there, you want to get out. You of course want to have some sort of protective stop, or if it's really going against you, you aren't willing to lose more than that. But if you're looking for a scalp, really you get a few 5-minute candles under your entry level, it's time to exit that trade. Well, if you're working on a day trade, you should typically be trading, next week contracts, or, if it's a Monday, obviously you can trade those same week contracts. But we go into Thursday, Friday, you're looking for more of a day trade. You're going to be much, much safer buying the next week contracts. And so we can do the exact same thing on Apple, entry here, but widen our stop a little bit. Because we're looking for a bigger move. We aren't looking for an explosive 5-minute candle at this point. We're looking for more of a day trade, or a longer trade. And so go to the longer time frame. And then when it's a day trade, you still want to use the similar idea of scalping targets and scalping stop outs, because if we're scalping and we're just using this level that we have here, because if we're around it, I will be trading this tomorrow. That's why we're talking Apple. So our scalping stop out, ideally somewhere right around here. We only want to be risking a little bit, 10% a contract, maybe 20 cents a downside, 30 cents a downside. Well, if we're in a day trade, we want to start to look to the lows of some of these previous consolidations. So we had nice consolidation here earlier in the day that led into a nice push. So if we're able to get the pullback to here, you're really going to want to widen your stop to some of that previous consolidation. Yes, it does increase your risk, but you're looking for a bigger move. So when you do this, now you start to analyze your risk reward using your profit targets. Your first one right here, going to be 80 cents above you. I think that's right. Oh no, going to be a buck 20 above you. Nice. Buck 20 above you. Stop really going to be below this 169 area. So you're only risking about 60 cents. So you've got a 1 risk to the downside and you have a 2 reward to the upside. That kind of puts another thing in your favor of your trade. So now we can start to use these profit targets again. If we get the bounce here, and again, it's always hard to teach these kinds of things because we just have to say things are going right, So I get to say, oh, if we bounce to here, up to here, then trim your contracts. Well, in reality, that bounce is likely going to go up a little. It's going to come down a little. It's going to go up. It's not going to just be a straight line up to here. So when you aren't scalping, you can kind of ride these a little bit longer because you have you have a target of where you want to be. Obviously, if you're seeing profit at any point throughout this, then trim some if you're happy with it. However, when I get up to my first profit target from my entry, and this is just me personally, I'm taking half of the position every single time. How I like to explain it to people is if we're up 20%, say we're up 20% right here. Well, if you sell off 60% of your position, that other 40% is mostly financed. That's what I always like to tell people. You don't need to finance the whole trade in one go, but you will be mostly financed by selling off half of that position. You will have a couple free contracts. Then, and this is day trade scalp, this doesn't matter what it is. When you have trimmed your stop, bumps to above break even. No questions asked. Once you have made money on the trade, you do not lose money on that trade. It's okay to get some profit back holding trades, but you don't go red on any of those contracts. So same thing here. We get up to here, and then again, like I said, we'll get rid of those. We got to pretend that the market's just going to bounce and it's just going to take us up to here. Well, when we get up to this next profit target, your stop again bumps up above the previous profit target. And then when we get here, you take off a bunch more of your position. If you had 10 contracts and you've taken 5 contracts off, you take half of your position off. Now you want to take off another half, if not more. I'm likely going to take off 3. If I have 10 contracts, I'm trimming 5 here, I'm trimming 3 here, and now I have 2 runners. If we happen to reach this final one, you can again do the exact same thing where you can take, 1 more contract off, bump it above, take half of your 2, bump it above here, And now this is where your stop is. And if we keep running, again, bump it up and just bump it up and let the runner run. But you can see you want to have realistic price targets because, sure, you can buy them at 170 and say my target's 174. But if you aren't trimming at these areas where we know you can likely see rejections, anything like that, then you want, like, you aren't trading properly. You need to always be trimming because the reality of it is sure, maybe we get the run all the way up to here, but more than likely we're going to get, most trades, you're going to get to your first profit target. Maybe you're going to get a little ways up. Then maybe you just get a big old wick that stops you out of it. That's how reality works more often than not. And so when it works for you and you get to catch the trend on the way up, that's obviously the ideal. However, that's not reality. Sure, that happens sometimes, but more often than not, you're going to get a push up and you're going to get pullbacks, and you're going to get pushes up and you're going to get pullbacks. And so it's important to manage those trades and say, I'm not, like, I'm not going to give back money. That is the most important thing here. You have to remember, we appreciate your gains post tags and everything here, but you always have to remember that nobody's going to remember that you held 100 contracts for 100%, or if you held one contract for 100%. Nobody cares about that. Don't do anything to impress people. Manage your portfolio for you. You can see it in here. The people with big gains all the time, or say they have big gains all the time, tend to disappear because they lose all those gains. The people who put up repeatable 10, 20, 30 percenters every single day are the people that you see really, really progressing. So just remember, it's not a competition. You aren't fighting with anybody but yourself. You are, you're trading for you. So trim those positions, manage those positions, set realistic profit targets. Don't be the person who snipes Apple calls at 170, rides them to 173 and lets them go red. You don't ever want to be that person, because it's going to piss you off. And that's when you'll start making some bad decisions. So that is Apple, how I would set profit targets on something like it, and actual profit targets that I will likely be using tomorrow. Because, and that was why I wanted to show this one. As all of you know, I've said it a million times. I love SMAs on the daily. If we are trading around those big major SMAs, I trade the 20 is my dark blue one, 50 is this one, and then we got the 200 way up there looking ugly. If we're trading around an SMA, that to me is frequently going to be the most important level on the chart. Because what this is telling us is until today, for the last all of these days, except for this one, all of this, going back this whole way, anybody who if you bought shares here, anytime the previous day, you're red. So this is some of the, we had the failed breakout, but this is some of those first closings over this while it's starting to go flat to say, hey, if you bought shares exactly 20 days ago, you're green on them. You are starting to be green on them. That's what the SMA shows us. So that's 3 weeks of suffering people went through to get here. So offers a very, very nice point to trade off. So that's why, I got it labeled there. And then again, you guys saw how I got, actually see the question, how did I get them? Major lows. And then we marked a major high up here. And then we marked one level from the after hours today, just because I personally feel like this wick could be an important one tomorrow, because that is where the market quit pushing after hours. So that was it. Just major highs, major lows, super simple, and keeps you on those realistic targets. And so, as I said earlier, I don't know, not everybody was in here. We got a nice little crowd now. Oh, I got a couple questions. Yeah, I missed some stuff. Oh, how much do we trim? We answered that. Yeah, Raymond, I'm assuming happens all the time was to me saying I paper hand. Does happen all the time. But whatever, that's good. Green is green. Yeah, Raymond, again, switching time frames. You're day trading, that's a much, like, it's important too. If you don't want to be in the scalping mindset, look at those longer time frames. All of a sudden things will start to look really, really good. That's even today, when everybody was trying to like short things like all day, And then I finally told somebody, I was like, man, have you seen the 30-minute on SPY? And it was like somewhere around here. It's like, there's not a thing in this chart that tells you to be short. You know, look at those longer time frames. And it's amazing how often if you start to go to these longer time frames, like, and it always hurts when you look back at it and say, like, why was I not just long? Like, why didn't I just stay long, you know? And the longer time frames frequently show you that. Whereas this one, don't get me wrong, there was some nice short scalps today. I think I shorted it at some point today. But when you look at the big picture, those longer time frames, all of a sudden it really comes into view of like, what am I doing besides fighting the trend? Swing, asking about the swing trade. I forgot that we were also supposed to talk about that on Apple. So the main thing that I'm going to do different when I'm going to do a swing trade. So as weird as this is something that I picked up from Shark. I like to, if I'm entering a swing trade, I'm not entering it first thing in the day. I want to kind of enter it in this afternoon shop. Look for if my parameters are being met on a swing trade, I'm going to kind of let the market work, chop out a little bit, and I'm going to look for things like this, you know, some double bottoms in that afternoon chop. And that's where I want to be entering a swing trade. Where it is going to differ is the stop is going to be wider. And, you know, we put on this one from those after hours more for day trading, more for things like that. The stop is going to be a bit wider. And then I am going to spend little to no time on short time frames. Hourly, if you're swing trading and you're below the hourly time frame, unless you have crazy news, things like that happen, you're doing it wrong. You know, swing trades should be based on longer time frame decisions. And so if I'm swing trading, the only thing that I'm going to do is widen that stop out a little bit. You know, I might even go for dailies. It depends. We've just had such big daily candles. But if I'm actually, as I look at this, I really do kind of like it. If I am looking to enter a swing trade, I'm going to look for any of these pullbacks to 168. And then I'm going to do the tighter stop is going to be a close below the high of this candle. Any information I get from for any trade comes from the chart. Never trade on feelings, never trade on any of that. So I'm going to have two stops in mind. If we're getting a daily close below this 169 area, the high of this candle, that's basically what I'm going to be willing to risk, because that's going to be giving up that daily SMA, and it's going to be, you know, giving up that previous breakout where we might see a pullback that might give us a better opportunity to get long. On the other side of it, if we really get blown out, if we start to give up, you know, this low, if you're trying to enter a swing trade off of this type of thing tomorrow, if we give up this low, I'm stopping out. And that's, you know, intraday. I mean, we start to have candles closing below here, I'm out of the trade, no questions asked. Up here, I'm not gonna, if we get a, and I'm just gonna put this line on here so we can kind of look at it on the chart. If I am if I'm in a swing trade and I see a 5-minute candle close below 169, I'm not just stopping out of my swing trade. I'm gonna let that thing breathe, see if we're gonna bounce back over it. I'm not just gonna panic out of the trade. Whereas if I'm in a scalp or I'm in a day trade looking for the move to go in my favor quickly, I'm likely going to take that stop out if we're really selling down to that 169 and below it. But on a swing trade, I'm going to be in contracts with 3 weeks of time. So if I'm letting this thing go, you know, $1.75 against me, I'm not too concerned with 3/4 of one delta. So that's really, for me, that's how I'm going to treat the swing trade stop out. And then on the upside, I'm really going to, you know, play our targets more than anything else. Obviously, if you like the gains in there, like if I was getting into a swing trade, I would be targeting this 171.85. Next target is going to be this 50 SMA. Beyond that, you are down to a runner. We can, you know, you can always find some additional levels, you know, some nice rejection points, honestly, like this one. That could really be your final target. But if you aren't down to very, very minimal contracts by here, then you've missed what I've taught in this lecture. But when you're swing trading, you do want to have those, I don't want to say, you know, far targets, but you want to make sure it's worth it. When you're swing trading, you're typically buying more expensive contracts unless you're doing degen weekly stuff, but that's not like really swing trading, that's just being a degen. So, but you want to have these, you want to have targets that are a little bit bigger so that the risk is worth it. If you're trading a $700 contract, apples aren't going to be that expensive. But if you're trading a $700 contract and you're looking for a buck move, there's no point. Like that's horrible risk reward. But something like Apple, you're looking for the buck 20 move. You got about a 50-cent stop below you. Final target somewhere up here, $3 above you. That's a really nice little swing trade for you. Ricky, good question. What would I do if we, hold on, I want to get rid of this. What would I do if we gap above first target up here, or we gap below there? I won't trade it. The next time, it's as simple as that. The next time that I have interest in Apple is buying calls down here. If we pull back to this trend, then I'll look to buy calls. I'm not going to try to short it on a potential breakout because especially when we've had, sort of an attempt with a failure, and now we're really, and with some testing, and now we're really trying to turn around. I have no interest in being short down here. Can you maybe catch it? Sure, but I look for a dip to buy here. My only interest in short is if we start giving up these lows. If we gap above first profit target, I got no interest in being in it. Sure, you can catch, and it will be Friday, so for some degen stuff, there could be fun. But we gap above first profit target. Next profit target is just right up here, buck above us or whatever. So I don't love that risk as much. I like the risk or the reward potential rather much more from here than I do up here. So for me, Apple has two entries for me, right there or right there. And those are the only places that I'll personally trade Apple. And then again, from here, we still get to use those same profit targets. If it's below here, first profit target, second, third, fourth, we're still always targeting the same place. How important are previous days highs and lows? Extremely. And I absolutely love them for profit targets. Great question. We just went for daily profit targets. Those ones, not only previous day high and low, but pre-market high and low. These things, these highs and these lows tend to be crucial. Highs and lows here tend to be crucial. I love both of those for targets. We didn't talk them with Apple tonight because well, technically, we'll see if this ends up being pre-market high tomorrow. I think this is a level to watch, we'll see if that ends up being pre-market high. But I love previous day high and low and pre-market high and low for levels. Swing. So I think I kind of answered that question as far as the stop loss. On a swing trade, you really do want to widen it out. However, your second part of the question, switching from swing trading to day trade, it's okay if a scalp becomes a day trade. I don't like a day trade becoming a swing trade because frequently when people do that, it is because they have their positions read. And the worst possible reason you can ever swing a contract is because you're down. That is horrible to do. And so I don't like day trades turning into swing trades, especially because I typically will have different contract selection. If I'm in a day trade on Monday and it's going really good, and the position's up nice, well, I don't really want to swing it if I'm in a Friday because that is a weekly. So I'm going to be fighting theta. Whereas if I had entered the trade with planning on a swing, then I would have bought 2-3 weeks of time so that I didn't have to care about that overnight movement or any pullbacks or bounces, depending on long or short. You don't have to care about those when you have time. So for me, scalp becoming day trade is okay. I don't love day trade becoming swing personally. A successful trader, 2 to 3 weeks, good place to be on swing trades. If it's a cheaper contract or cheaper stock, some AT&T, Coca-Cola, those kinds of things, then you can I look for the next monthly contract that's available. The price is affordable enough that it's always best to do it that way. And so So got through our questions. And so now we're going to touch on just one other thing. And I actually just kind of discussed some of it in answering one of those questions, but we're going to discuss one other thing of things you can use for profit targets. Obviously we just discussed previous day highs and lows. And what we mean by that, for anybody who doesn't know, it's really just the high from this previous day and the low from this previous day. We can even see this was the high, we battled around it, and we're finally able to push above it and hold it for a little bit into close. I love a previous day high. Another one that I love is any sort of pre-market low or pre-market high. So all I marked there, the highest high and the lowest low. Some people, technically speaking, from here to here on the chart is after hours. From here to here on the chart is pre-market. I treat them all as one. I just care about the highest high and lowest low, because those are, to me, the parts where, as I discussed earlier with Wix, right here, sellers gave up. Right here, buyers gave up. That's where we want to know what's happening. Sure, we can mark this one, but sellers ended up going past it. Or we can mark this one, but buyers ended up going past it. So I want to know the point where they really, really gave up. So that's what's most important to me. Then the next ones that we're going to talk about, because all of us use them, is just using your indicators. I use, well, I guess when I have, this is the hourly 20 EMA, but we're going to take that one off just because it's ugly. But beyond that one, I use 4 indicators. I use 3 EMAs. I use the 9, the 20, and the 50, and I use VWAP. So if you are ever scalping, or you are ever looking for, dips to buy or entries on day trades or things like that, EMAs make a wonderful price target. VWAP makes a wonderful price target. We even talked about this one today in my tab, I think. This break here, and the push up to VWAP. These can be, your entry can be trend break, hold the 9. Then you can trim at the 50, or you can wait for the pullback to the 9. Again, trim at the 50, trim at VWAP, and then maybe you want to hold one to your final price target up here. But EMA is another great thing to use as a price target. VWAP, a great thing to use as price targets. Some more advanced ones, fibs, people love to use the Fibonacci's. I love a retrace. I run one on, if anybody doesn't know about Fibonacci's, if we're trending down and you're looking for a bounce, draw the high to low and maybe target that 38.2 or 50% Fibonacci. And it can work the other way as well. If we're trending up, I guess we've had some tricky ones. If we're trending up, and I'm just kind of basing these off the opening range, we're trending up to the high, look for that pullback to the 38 or the 50. They can be wonderful price targets, stops above them. So really just use these things that we have at our disposal. My main targets are typically going to be support and resistance, trend lines, those kinds of things. But the EMAs, SMAs, VWAPs are all really, really powerful tools for it. Let's see. Nice, getting some highs and lows. Yeah, and again, these, always remember, people ask questions. If I'm saying something and you don't understand it, ask a question. Just stop me. I'm terrible at keeping up with the chat, but we'll get there. So yeah, Raymond, good question. So a retrace is when you're looking for a bounce. So on a retrace, like something like this on Apple, we would go from our highest high to lowest low. And look for those bounces up to that, 38, 50%. Frequently, if you get above the 50, you're starting to see a trend reversal. On the other side of it, say we did our high to low, and we're going to use, so if anybody doesn't know, I trade the opening range. Real quick description of it. It is the highest high and lowest low in the first hour and a half of the day. So that is what these blue lines on my chart are. So on the other side, something that I will do, the other Fibonacci that most people use is an extension. And so how you might use an extension is like this. You again go from your highest high, and I'm just using the opening range. It was technically set back here, so I guess we'll just go off of there. You go from your highest high to your lowest low, and then you put on a Fibonacci extension. As we can see, they didn't work today. This was a failure. You would have been stopped out on this, which is perfectly fine. We all stop out on trades, but this is what's known as a Fibonacci extension. So if we're breaking out of this range and we don't have a lot of levels to work with, pulling a fib can be a really, really great way to just give you some levels to watch. So again, all of those levels, all they are is price targets. So Fibonacci is another really, really great one. And so with that, we've done Apple, we covered Apple, we've covered reasonable price targets, setting reasonable price targets, using support and resistance to do it, finding those previous swing highs and swing lows to use. And so it, of course, ran quite a bit longer than we expected. But if you guys want, we probably got one more thing, a little bit more time that we can talk about on maybe one more. Let's see. Got Raymond. QQQ, yes, we can talk about, but I'm going to show it to you. So this right here, not helpful for trading. Where QQQ is we aren't breaking out. We did take a nice bounce today. We're well above lows. We're well above highs. So as far as I'm concerned, we're in a range. Even if you look at this weekly candle, we're printing an inside candle unless things go insane tomorrow. I mean, QQQ needs to dump, let's see, $8, something like that. Oh wait, no, even more than that. We got 424. Well, QQQ needs to drop $12 tomorrow, or it needs to rip over $20 upside for us to not print an inside candle. So we're in a range. So for me, QQQ and SPY looks virtually the exact same. QQQ, I'm in scalp mode. I mean, and I've been trying to say it in my tab. Of course, there's been some really nice moves to be had, but it's really going to come down to trading some of those pre-market highs, pre-market lows, likely previous day highs and lows if we pull back, breaks of these pre-market highs if we're going to continue to push up. But for me, QQQ not in a place to be entering swings or anything like that. And when you pull up the SPY chart, exact same thing. I have interest longer term above 506. I have interest short longer term below 495. We're sitting, I mean, a little to the upside, but we aren't sitting anywhere good that I want to be trading it right now. I want to be trading it. I'll be hammering it tomorrow. Love range trading if we get a range or a trend or whatever. But as far as breakout, we got a lot of work to do to be anything beyond an inside candle. For a swing, yeah, theta does start catching up, but also, I mean, just without beating around the bush on PayPal, the only thing that caught up to PayPal was not having a stop loss. I mean, that trade just went against you all for so long. It was unfortunately just something that should have been stopped out of, And now at this point, that contract, it ain't coming back, unfortunately. So that's just the way it goes. So you can't really blame Theta on that one as much as the no stop loss was the real issue with that trade. AMD. Yeah, let's check it out. What's it looking like? It looks exactly like QQQ. Looks exactly like QQQ. I mean, let's see. I gotta believe that we're trying to. I'd really go there. Well, I mean, I'm not gonna be rushing in. Where are these SMAs at too? I'm not going to be rushing into calls tomorrow on AMD. However, a nice crack over that 155, and I mean, and with how AMD moves, I would imagine that 157 comes pretty dang quick. 159 will come shortly after that. That's likely. I mean, that seems like a pretty likely pullback point. But then above there, I mean, look for us to this is old range. range we spend a ton of time in. Above there, I'd start to look, eventually for this push back up. I mean, AMD is not something to be bullish or bearish on. It's obviously nothing compared to Nvidia, but nice eye. I hadn't actually looked at this trend. Otherwise, pull back to this trend and somewhere around this 145 level is sort of the place to give it a test run if you can for a long bounce. Otherwise, that 200-day comes into play on the downside, in my opinion. What do you got? What is that? Were you looking for something similar? Are you seeing something I'm not? Do I need to like look left a little bit more probably? I mean, really that 145 is sort of the entry. Holding that 150 though is a big deal. I'm not bearish on AMD above 150. But for me, I don't want to chase this unless we're seeing breakout personally. How far does Meta have on the upside to go to 460? I don't quite understand the question, but it looks like it's got $16 to get there. That's my share price. I tried to catch the knife a bit too early yesterday. Its chart is very bullish, like MO. I don't know. Oh, Altira. I mean, that is pretty bullish. That's going to be tricky, but that gap fill could pay nice. But so I honestly, sorry, I should have just read that whole question and answered it. You don't adjust price target. Price targets are price targets and they don't move and you trim at them because if you don't trim at them, that's how you end up on the wrong side of the trade. You let big green go red against you. Price targets are price targets. There's no way around it. If I was in longs, I would be out of nearly my entire position right here. If we do get a break and look like we're going to fill that gap, then great. But I'll be looking for a new position. If you've caught this move, I would be out of most of it here. Do I think RSI matters for short-term trades? Absolutely not. I think, to be honest, I think it hardly matters for long-term trades, if I'm going to be real with you. But I just am not an RSI liker. It's never worked for me. I mean, because the idea of something being like overbought or oversold, like, well, look at the chart and you get a pretty good idea if it's being bought a lot or sold a lot without RSI telling me too much. I jokingly call it the really stupid indicator. Snow. Oh, wow. Man, was that you who asked this I think that was you. Did you ask me this last week? And I told you to look for that dip to 142. They snaked us there every week. Love it. Love it. Yeah. Well, did you take the 142 entry? Because God, was that even 2 weeks ago? I don't remember. But somewhere I remember drawing this box just recently. I personally don't trade snow a lot. I just don't like those low volume contracts very much. You got stocks and leaps? Well, I mean, this the selling to me appears that it has happened. I mean, this 140 should theoretically remain as a wall, I mean, if we start seeing selling below 140, that's where you can start to get like a bit more worried. But I mean, I wouldn't enter it after this big old bounce, but any of these dips down to that even 138 all the way up to 142, I'm a dip buyer on snow in there for sure. Look at the 4 hour. I went the wrong way for you. I went to the weekly. I mean, yeah, but you have to remember, like this is all like I mean, this is great move. Shout out Google and Microsoft for ripping the whole market. I mean, this isn't like Snow wouldn't have done this without them. So, but looks nice. Got this little trend here though that doesn't look like amazing. Oops. I mean, that trend's likely the next hurdle. If we get over that, to look for some price targets, since that's the lecture. Obviously, over trend over 155. Next target's going to be around that 160. Next one's going to be this 166.50 and likely the top of that range. Those are too wide though. Like if you don't trim on a $6 move, you're doing it wrong. But yeah, that looks a little tricky there. We had some nice bounces here. Now let's go back in and look at that on the 4 hour. Yeah, we'll see. I mean, if this thing holds us outside of there, looking not too shabby. We can even redraw this little thing here. Some more detail. I mean, yeah, we're cracking it on the 4 hour. Let's see what it wants to do. Nice eye if you're in that and you bought that dip. That was a nice dip buy right there. Okay, well, I see a few of you trickling out, so if you got to get out of here, thank you so much for being here. Nice crowd tonight. Love having y'all here. Great questions as always. I appreciate all you people who come to these and always have questions and comments. And you know, these I always try to remind you all these lectures are for all of you. So if I'm not explaining something or you disagree or anything, let me know, you know. But thank you all so much for being here. It's a good lecture. Good lecture. Yeah, thank you, everybody. Thank you all for being here. Yeah, Rudy, let's get him. Cornbread, my guy, how we doing? Yeah, thank you, everybody. Thank you all so much. Like I said, I just appreciate you being here. Love seeing the same names every night. You guys are awesome. You know, we recognize you trying to learn too. So thanks for doing it. Yeah, right on, everybody. Thank you all so much. And with that, we will be calling it a night. Thank you. We will see you tomorrow, Friday. Trade safe, have some fun, and we'll talk to you soon. All right on, Jerry. Love to hear it. Love to hear it. Okay, everyone, have a good night. We'll talk to you tomorrow.